Okay, let's talk Bitcoin. Guys, in this video, we're going to be jumping down into everything Bitcoin. Whether we have found the Bitcoin bottom, whether this is the bear market bottom for Bitcoin, whether we think there is more room to the downside, and what I would expect to happen next here with BTC. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. It does go a long way. And if you happen to be new to the channel, then why not go ahead and subscribe? Stay up to date with all of the videos that we do here at 𝗕𝗘𝗪𝗏. If you want to stay up to date with all of our movements and have a general chat with us, join us in Discord as well. Links in the description below. Okay, guys, so let's get into this. Right here in front of me, we have Bitcoin paired up with USD, and this is the weekly chart on Bitstamp. This is a chart that we look at relatively frequently. We've brought it up a few times recently, just talking about what I think is going on and analyzing kind of previous moves in the market. Right, so in here we can see we've mapped out 2013 all-time highs, 2017 all-time highs, to 2021 all-time highs. We obviously had the bear market lows in 2015, 2018, and potentially 2022 still to play out. We also have Bitcoin's halving in March of 2024. It's not 665 days now. It's probably more like 645 days. I don't know how long that's going to be, but we'll kind of leave that there. And for the most part, what I want to talk about in this particular video is obviously the amount of red weeks we've had in a row. I don't think this is actually a big deal. I think a lot of people kind of read into it a bit too much. The market has to do certain things based on how people are behaving in it, right? And I think a lot of people kind of jump on certain narratives, but I think there's a few things that we really have spoken about before that are worth just reiterating, and then talking about what I think is going to be going on here. So what we'll do is we'll start off by throwing on the basics that we've spoken about before, right? We've thrown on here the simple moving average before. This is a 200 weekly SMA. Okay, this is obviously something that we've spoken about before, where we can see that we've come down and rested on this 200 SMA in the previous cycles lows, right? We have the 2015 lows, we've got the 2018 lows. Obviously the pandemic crash brought us just below it briefly, and then we rallied on up from it. And obviously this area right now is resonating incredibly well with where I have forecasted our bear market low, right? $23,000. Now the 200 SMA at the moment is actually 22,191 at the point of recording this video. My wave counts in terms of Elliott wave theory are suggesting 22,900. So we are right in that sweet spot for thinking this might be an area that we're going to be bouncing from. Although we've got some green candles now at the moment, I don't think this is actually anything more than just a bit of a bounce in the market before a pullback down. And we've spoken about this morning in terms of all the corrective play and all of that kind of stuff. And I think I can kind of see $33,000 and then, potentially pulling back from there and starting our descent into the final fifth wave low, taking us to 2,900, right? That's kind of what we're looking at. So that's kind of what's going on there. That's the 200 SMA. So this actually gives us confirmation of our wave counts in regards to how the 200 SMA has been in the previous bear markets, okay? So that's the SMAs. But what about, let me actually remove that one. That's rubbish. Let me come over to the indicators here and just find the EMAs. We'll throw these on and we'll just get rid of that. So now the EMAs are exponential moving averages. These are also used in the previous cycles to help us understand what's most probably going to happen. These are average prices. I don't tend to use them, the SMAs or the EMAs, all too often. I know that people tend to like them though, so I cover them in the videos, but I don't personally use them. But basically what we've got here is the 20 weekly EMA. Okay, once we've closed a candle below there on this weekly chart, we generally, in the history has repeated itself a couple of times already, we move down and below the 55 EMA, okay? Now, we've wicked below the 55 EMA after closing below the 20, but we haven't closed below it just yet. Closing below this would put us pretty much aligned to the SMA, thinking that we are, if I actually throw that back on there, as you can see, these two things kind of working together in tandem here. And you can kind of see that we'd close below the 55 EMA, and we'll probably rest on that 200 SMA, okay? So from the most part, that's exactly what we're looking at here, and this is what's happened previously in the past, right? We closed below the 20 EMA, we closed down below the 55 EMA, and rested on the 200. SMA. Okay, so pretty interesting kind of stuff from the moving average perspective of things. Okay, so we'll throw that on there. And the other thing, that is probably worth also throwing on is the Gaussian channel, right? The Gaussian channel is super interesting, and I think we can now bring this back into play. So a little while back, I was looking at the Gaussian channel, and it was suggesting that as soon as you closed inside the Gaussian channel, you went into a bear market, and you're basically looking to go below the channel altogether. Now, again, the Gaussian channel is a glorified set of moving averages, okay, but this also helps us understand, and so far actually has a really good track record of where these bear markets come in, right? And before I wasn't 100% convinced because it did something that hadn't been done before, right? So basically, in our 2013 section, we closed inside it and we went straight down, right? We didn't go out of this Gaussian channel. Once we closed inside it, we went on down, and that was that. The same thing was also done back in 2018. We closed inside the Gaussian channel, and we just continued to go down to or below the Gaussian channel, and we turned red. Okay, and then we had the pandemic. The pandemic was an odd one. We went inside the Gaussian channel, we came outside of the Gaussian channel, then we collapsed down below the Gaussian channel, then we rallied on out. Then, of course, we closed inside the Gaussian channel, and then the very next week we closed above it. So some strange things were going on here, because the Gaussian channel was kind of being pitched as a way of predicting the bear markets, right? As soon as you closed inside this, that was it, you were done. You were closed inside it, you were done. We closed inside it, but it didn't look like we were done. And actually, on reflection of this now, we can actually reflect and say the Gaussian channel still holds up today as something that we can use to basically be a good indication of where the bear markets are. But it goes a little bit beyond that, and because the Gaussian channel can also be used to understand where the maximum amount of value is going to be added. Okay, where do we actually want to be necessarily buying this thing, right? So the Gaussian channel at the moment has not turned red, which means we haven't actually had that optimal value point just yet. So I think the $23,000 low is something that we should be considering. And not only is it in the wave counts, not only is it in the EMAs, not only is it in the SMAs, the Gaussian channel is also telling us that we haven't quite reached the bottom just yet. So once this actually starts to turn red, which we should start to do, we should start to see this bottoming out inside the EMAs, the SMAs, the wave counts on Elliott wave theory, the Gaussian channel turning red. We should get confirmation that that's the low point where we can then actually start to slowly ladder our way in and start to see this thing climb on up and out. Now, the other thing that's worth pointing out, let me just remove the Gaussian channel there, is the length of time that it takes to move from the lows to the decent highs. Now, I think what we're going to witness over this side, and we have to kind of forget that whole Bitcoin halving thing. I don't think it really matters anymore. But basically what we've got going on over here, I think is going to be something that happened over here in 2013. I think we're going to replicate this. We're not going to replicate what was happening over this side. And I think this comes down to the fact that this was when adoption was slowly growing. Okay, and we started to really get some traction here. As soon as we had this bear market low, bam, people bought it and it went up significantly, right? So I think we're going to have more of this V-shaped bottom right here. Okay, so we're going to come down, we're going to bounce, and we're going to move up. Okay, I don't know if we're going to go up into new all-time highs really fast. I think it should happen, but before the end of the year, but I could be completely wrong, and that timing is not something I'm going to get right whatsoever. But I think about the kind of players that are involved in Bitcoin, what they're going to want to do is balance their balance sheets or balance their books by the end of the year, right? So you'll find that there'll be some kind of fluctuations in December, whether they sell and buy back up in January, I don't know, maybe we'll just continue running. I've often said autumn, but I'm not going to get that right. It could be a little bit off, but it does feel like we are likely to see the bottom in June, July, maybe mid to late June into July. We should find this, hopefully the 23k bottom area. We just bounce around a little bit as we had done previously, and then we'll slowly get some traction and then lift from there. That's kind of my expectations. What is going on right now is not something that I am overly optimistic about. And therefore not really participating. I am expecting a massive pullback still to occur. And I say massive, it's not actually that much, but 23k from 33k, you're going to lose 10k on Bitcoin. So, do expect, what's that, going to be 30, 30% or so just drop from Bitcoin, which is going to make those altcoins bleed out hard as well. So do be aware of that. But essentially, that's kind of what I'm looking at. I'm looking at this kind of pullback down, and then we are looking for a lift off from there. And I do expect it to be more like the 2019 scenario where we hit the bottom and then we lift off, not like the 2015. Where we slowly kind of grind sideways and slowly work our way up over a year, multi-year period, right? I don't think it's going to be like that. We have this 1 year drop as we had done previously into 2017, January 2017. I think, December 2017 to December 2018, right? 1 year down. That was your bear market. Where are we looking? Well, we're looking at November. We could be maybe pushing a little bit shorter than a year. We'll have to see how that goes. We have the bear market low, and then basically we spend in the next kind of several months just moving on up. So it could be into 2023, but I think we are getting that point of reversal. This is the place where we want to be accumulating. But again, using the Gaussian channel as the point of value add that comes in when this thing turns red. When this is red, this is where we know we have found the optimized place for accumulating. Obviously, use this in conjunction with Elliott wave theory and other indicators. Don't just rely on it independently on its own. But essentially, that's kind of what we're looking at. I would like to think that we'd go up into new all-time highs by the end of the year, but there's no guarantee of that. Bitcoin halving will happen in 2024, which obviously would put a spanner in the works of all of this, right? Because Bitcoin's halving historically has had an impact, or at least we're led to believe it has an impact on price movements, right? And if we actually really reflect on that for a second, let me find my vertical line here. We have Bitcoin's halving event somewhere around here, right? Right inside this pandemic crash. And everyone thought it was the Bitcoin halving event that basically led us into the bull run. Well, no, the bull run actually started down here in January of 2019. Okay, if we actually run this up into an Elliott wave theory, you have wave 1 here. This is just a wave 2. This is wave 3. All of this might be wave 3. This is then wave 4. Then we go up into wave 5, for example, right? It's also possible, although rare, that that's a wave 3, that's a wave 4, and this is a wave 5, but that's incredibly rare. You wouldn't normally expect to have a wave 5 that short without some kind of reason for it, okay? But nonetheless, as you can see, the bull run started here right after the bear market low, and we saw this demand kicking in, okay, and the price moved. The market is completely reversed. The pandemic crash and the Bitcoin halving event had no bearing on where this started over this side, right? So it's important that we understand. Other than that, you were talking about going way back into 2016, and where are we? Right here. Let me grab my horizontal ray. And yeah, we would have been somewhere around, let me just go ahead and put it right there. Okay, the bull run started over here in January of 2015. The halving happened in 16, March, and we get that continuation of growth. But did the Bitcoin halving event actually make a difference? I don't think so. The bull run started way before Bitcoin's halving event. If anything, it just helps kind of sell a narrative, right? So I don't think there's actually too much credence or any kind of substance that we can really apply to the 2024 halving event. And in theory, we should start significantly beforehand. So it'll be interesting to kind of see how this plays out as to whether or not this actually is just maybe a trigger point for a bigger wave to the upside at a later date, or whether it adds absolutely zero value to the market. But ultimately, this is where Bitcoin is lying, right? We had an 84% pullback in the bear market low for 2018, 86% pullback for the bear market in 2015. And do you know where we are going to land? Most likely, in my opinion, we are most likely going to be about 67%, okay, which means that the market has matured quite significantly for BTC. It means that these pullbacks that we've seen historically are matched with the amount of gains that we are seeing now, okay? You cannot expect Bitcoin to go down 84% if it only went up 2,000%, okay? But you could expect Bitcoin to drop down 84% if it went up 12,000%, right? So we have to understand that these two things, they work in tandem together. They are not in isolation, right? Over this side, we saw 51,000% in gains. We saw an 86% pullback. We saw 12,000% in gains. Yes, that was a huge diminishment in gains, but this happens as it matures and as the price increases. It's harder and harder to move the needle. And over that point, we only saw an 84% pullback. So a slight decrease, but not too much on what would happen previously. Now we've only seen 2,000% in gains in this bull run. Okay, that's taken it from the January 2019 to the 2021 all-time high. And if a bear market low comes in at $22,000, that's a 67% bear market, okay, which means we are seeing diminishment on both sides. It means the bear markets are going to be less severe and the gains are going to be less rewarding. Okay, so understand how these things work, but essentially that's how the market is, and that's why Bitcoin is a long-term investment for kind of protecting your wealth rather than used as a vehicle to gain wealth. We look at altcoins for gaining significant wealth. We don't look at Bitcoin for that. So when we're at these bear market lows on those altcoins, they scoop up fantastic deals, and we grow by 100,000%, for example. Or in the case of a couple of examples, 𝗕𝗃 at 42,000, 𝗕𝗪𝗏 at 38,000, 𝗕𝗘𝗪 at 38,000. There's so many altcoins that we've had in our portfolio that have grown massively, in comparison to that of Bitcoin. But Bitcoin has its place. You just have to understand what it should be used for and what it shouldn't be used for, essentially. But I'm going to leave the video there, guys. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.